Hello students. So we are now moving to session 4 of our objective questions discussion. So in this session we will be discussing question number 61 to 80. So we are moving to question number 61. So this is related to the chapter dividend. The amount of dividend shall be deposited by the company in dash in a separate bank account within dash days of declaration of dividend. So we know that under section 123 subsection 4, the amount of dividend to be deposited in a separate scheduled bank account within 5 days of declaration. So the answer will be option B. 62. All such shares in respect of no dividend has been claimed for 7 consecutive years. 7 consecutive years shall be transferred to IEPF. Moving to question number 63. Question 63. So material change in terms of section 241. So material change is one of the ground for giving application under section 241 to tribunal, which is related to operation and mismanagement. So there are 4 statements. So material change is having connection to which all statement, that we have to check. So a change brought by or in the interest of creditors or debenture holders, it is not correct. A change brought about by or in the interest of class of shareholders, it is also not correct. Alteration in board or manager, this is coming under material change. Alteration in the ownership or in the membership of company, this is also correct. So we are having 3 and 4 as correct. So only statement 3 and 4 are correct will be our answer. Question 64. Dash of the IRDA is covered in the definition of member. So definition of member covers whole-time member, part-time member, chairperson. So our answer will be all of this. 65. Foreign company engaged in reinsurance business. So this is section 6 of Insurance Act 1938. So foreign company engaged in reinsurance business is having 2 options. If it is establishing business through branch in India, it should be having minimum net on fund of rupees 5000 crore. If it is establishing through IFSC, its minimum net on fund requirement is 1000 crore. So this is a foreign company which is establishing through branch in India. So the minimum NOF requirement will be rupees 5000 crore. Question 66. RBI is empowered to remove from office. So this is section 36 AA of Banking Regulation Act. Under 36 AA they can remove, RBI can remove chairperson, director, CEO, officer or employee. So we are having the answer as either A or B or both. 67. Remittance for living expense of parents, spouse and children residing abroad. This is a current account transaction which is given under section 2 clause J of Foreign Exchange Management Act 99. Question 68. Board of Director may decide to prepare a revised financial statement or a revised board's report, section 131 of Companies Act, in respect of any preceding 3 financial years. So voluntary revision of board's report and financial statement will be allowed in respect of preceding 3 financial years. 69. When AGM is not held, the financial statement and other documents and a statement of fact and reason for not holding AGM shall be filed with ROC. So this is section 137. So it has to be filed. AGM is not held. So it has to be filed within 30 days of last date up to which AGM should have been held. Question 70. The concept of rotation of auditors is not applicable. So rotation of auditors is given in section 139 subsection 2. So it is not applicable to one person companies and small companies. So the answer will be option A. Appointment of cost auditor will be made by board of directors. Option D. So 72, which is related to combination. Any merger by reason of which enterprise remaining after merger has in India assets or turnover. So for combination, if the enterprise after merger is in India, the threshold will be more than 2000 as assets and more than 6000 CR as turnover. So our answer will be option A. The copy of balance sheet and P&L account shall be delivered to ROC by foreign company. So under section 381 of Companies Act, it has to be delivered in every calendar year, and the period is within 6 months from the close of financial year. Okay, so we have to comply these two conditions. So it will be both A and B. That means the financial statement, balance sheet and P&L account has to be submitted or delivered to ROC within 6 months, and it should be complied in every calendar year. Okay, so both these conditions has to be satisfied. So the answer will be option D. Corporate debtor or financial creditor shall not be entitled to make application to initiate CIRP if it has violated any terms of resolution plan which was approved 12 months before date of making application. So this is section 11 of IBC. So we know that there has been an amendment in section 11 of Insolvency and Bankruptcy Code. I have made a session on that. You can refer that. Okay. So we are moving to question 75. Articles of association of a company provides that person shall be disqualified for appointment as director if he holds less than 100 shares in the company. Mr. Innocent holding 30 shares will be disqualified. See, this is related to section 164 subsection 3, additional disqualification. It is possible only for a private company to specify additional disqualification in its articles of association. Public company cannot incorporate or public company cannot add any items in articles as additional disqualification. Okay, so the answer will be private company. Only a private company can add the provision related to qualification shares for directors. That is, if you want to become a director, you have to hold this much of shares. That is known as qualification shares. Such a provision can only be made by a private company. Okay, so the answer will be B. Question 76. The provision relating to woman director. So woman director is applicable to listed company or unlisted public company which is having paid up 100 CR or above or turnover 300 CR or above. So our answer will be option B. Listed company 100 CR and last answer will be 300 CR. 77. A scheme of merger or amalgamation proposed in accordance with the provisions of section 233 fast track merger is to be approved by majority representing the creditors' approval. In this case is 9/10 in value of creditors' approval to be made. Okay, so the answer is option A. Question 78. Compensation for loss of office cannot be paid. So the options are, if he resigns voluntarily, such an option is there. Company is wound up due to negligence of director, that option was there. The office of director is vacated by virtue of 167. So we can have the answer as all of these. Eligible members may make application to tribunal seeking an order of investigation. Section 213 of Companies Act. Investigation on order of tribunal. So eligible members will be 100 members or one or more members holding 10% of voting power. So it will be lower of A or B. Moving to question number 80. In the case of board meeting, the quorum is required to be present. The quorum represents, or under section 174, quorum is explained as minimum number of directors who are competent to transact and vote. So that clearly specifies quorum will be required at the time of passing each and every resolution. Okay. So these are the 20 questions for the day. Okay. I think the entire discussion is clear to everyone. We were able to discuss almost 80 questions in 4 sessions. So all the best for your examination. Do well. Take care. Okay. Bye.